Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Wall Street split on social stocks these days. Deutsche Bank lifting its price target for Facebook on improvements to its core service, while Citi slashes its target on Twitter on some revenue concerns. Let's bring in your Trading Nation team today. Katie Stockton of Fairlead Strategies and John PETRIDES of Tocqueville Asset Management. So, Katie, both these stocks, even though the calls were in different directions, both these stocks happen to be up today. How does each look in terms of your work, in terms of the trend? Which would you prefer?
Well, Facebook would be the winner from a technical perspective. It's a long-term uptrend. It still has positive momentum across time frames and has a potential bullish long-term formation called a cup and handle setting up. That would be completed on a breakout above final resistance, which is just above 218. Twitter, on the other hand, it's more of a range-bound situation on a long-term basis. If we did see Twitter get up into the gap down that occurred in October, that would be a nice incremental positive for the stock. But as it compares to Facebook, Facebook would win.
All right, so a vote there, in a sense, for the incumbent. John, the story fundamentally, big picture for this entire subsector has been they're just winning eyeballs over a very long period of time. They're winning market share in digital advertising, and they have pretty good profit margins on top of it. So what's not to like there?
Yeah, I think you need to be selective within the space, but look where the social media stocks have come from 10 years ago. I mean, 10 years ago, we were talking about MySpace. And now here we are where there's so many more platforms where it's the easiest in the history of mankind to distribute your message across multiple platforms. And over the next 10 years, we could be talking about, dilution of eyeballs because there are way too many. The barriers to entry in this space are not very high. I mean, look at, 3 years ago, Snap was all of the rage. And now you're looking at like TikTok is starting to take eyeballs away. So, and none of these platforms can charge a subscription fee to get on their service because, well, eyeballs will just pick up and go somewhere else. This is not to mention where you have things like, podcasts coming into fruition as well as another form of media. So, I think you need to be selective in the space, but I think 10 years from now, we could be talking about a dilution of social media platforms.
Maybe some of these companies might go to regulators and say, hey, we're vulnerable to new competition. You can't break us up or regulate us more. Not sure if that would fly, but something to keep in mind. John, Katie, thank you very much.
Every trader should accept that losses are a part of the process. So in an effort to reduce your risk and define your max loss, consider using stop or trailing stop orders. This approach can help eliminate emotion from your decision-making and set you on the path to consistent trading. I'm Joanna Payne, and Schwab is the better place for traders.